Greetings. We're back with our post-election edition of Happy Half Hour. We do this once a month. That's Toby Weber. I'm Nick Shermans. Toby, you feeling good today?
I feel great. It's raining outside, so it's miserable outside, so it's good to be inside and do our thing. So how are things with you?
I'm good. The week before Thanksgiving, I'm glad the election's over. A lot of hot election talk from both sides. And to be honest, it was sort of wearing on me towards the end, and even the reaction right after. All of it can just be a little exhausting.
Well, before we leave the subject of the election, maybe we start there. What are your thoughts on, not necessarily the outcome, because we obviously stay out of the politics, but what are your thoughts on, we've had people ask, are we making changes to the portfolio in light of the election result? How would you comment on the election impact and any impact to what we do here at Pure?
Yeah, so I'll start with your second question first. And I just wrote a blog about this, and I think it is important because so many people, despite knowing they should not mix politics and investing, do just that. They mix politics and investing. And I'm getting the same question. Now that Trump won, what changes should we be making? One, that's not how markets work. The markets were pricing in a lot of what it thought to be the election winner. So that happened in the lead up. And there were several signs in October that I talked about without talking about that the market was signaling a Trump victory. So people want to ask what changes they should make post-election. I think that's the wrong question. I think a better question is what is not going to change. And every now and again in investing, we get a series of themes that are kind of the backdrop. And this backdrop won't be changing for the next 5 to 7 years, let's call it. And that is higher inflation, reckless government spending, and the debasement of the US dollar. So I talk about various asset classes, all four in which we own at Pure Portfolios, that if you're looking to set yourself up with a multi-asset class portfolio, these asset classes might do well with that sort of thematic backdrop.
Perfect. One of the assets, I think, on that list in the blog post was Bitcoin. We haven't necessarily talked about Bitcoin recently, but it's obviously had a significant move up over 90,000 last week, this week. Talk about what you're seeing with respect to Bitcoin and how you're thinking about Bitcoin in this environment.
I believe I said this in a previous blog, but I never thought I would see a presidential candidate endorse Bitcoin. And, a lot of people talk about the Trump trade, and I'll be writing another blog comparing 2016 market action post-election to today. And there's some similarities and there's some differences. But Bitcoin was the Trump trade. And that was one of the things that I pointed to, the market signaling that Trump would win. Bitcoin had a ridiculous October, continued higher pre and post-election. That perhaps was the biggest signal that Trump was going to win. Trump has talked about a strategic reserve for Bitcoin. He's talked about making the U.S. home for Bitcoin miners and being very crypto-friendly. He wants to fire the head of the SEC, who's been anti-crypto. So a lot of the crypto bros, if you will, really rallied around that. And again, I think price action in Bitcoin really reflects the more crypto-friendly policies. Looking at IBIT, which is the ETF in which we use for Bitcoin exposure for our clients, that has quickly become one of the biggest ETFs. At 10 months old, it's bigger than every ETF that came before it, about 2,800 ETFs. So there is something going on. Institutional adoption. Bitcoin's made the journey from rogue asset class to more, I wouldn't call it mature, but emerging asset class. And it's going through the journey. It's almost on a fast track. It's surpassed gold ETF assets. So more institutional pools of money are getting access to Bitcoin. Pensions are buying it. Insurance companies are buying it. BlackRock is 100% behind it. So it's just interesting to see how quickly things have evolved for Bitcoin.
Yeah, and I think that being said, nothing's changed with Bitcoin with respect to the volatility and the speculative nature of the assets. So I don't think people shouldn't interpret our comments to mean, hey, the coast is clear, let's plow into Bitcoin. We're still, where we do have it in client portfolios, it's a very small percentage because it could just as easily pull back 30% in a month like it went up 40% in October. So nothing's changed with respect to the underlying asset, but clearly there are some more tailwinds behind it at present. Okay, next one I have for you. We've got about 6 weeks left in the year. Maybe talk a little bit about what are some of the activities that we'll be working on between now and year end for clients to finish up the year from a tax standpoint. What are some of the things that we find ourselves busy with here in the home stretch of 2024?
A lot of tax planning. I'm in the middle of tax loss trading, which for folks with taxable accounts, so non-IRA accounts, going through and looking at what are our year-to-date gains and looking to offset those with unrealized losses. Now, the last 2 years, it's been a melt up for equities. There's not a lot of asset classes that are down. So it's a little challenging, but we really try to maximize net after-tax returns for clients in tax loss trading and optimizing portfolios, not to spin off taxable income, using tax-free bonds in accordance with their tax bracket and their own situation is a big part of what we do. I'm a big fan of controlling things that we can control. A lot of investors worry about external factors. I think building tax-efficient portfolios, having a process to maximize after-tax returns is really taking the low-hanging fruit.
Yeah, I think it's been 2024, at least so far, has been a good year. Last year was a good year. And I think there's sometimes the thought that we kind of sit on our hands during these times, but we continue to monitor, manage the portfolios, rebalance on a monthly basis as needed, continue to run our rules. And then, as you said, the year-end stuff with tax loss harvesting, could be financial planning for people with retirement or something in the offing in 2025. So just trying to finish the year on a positive note and get ready for 2025. So we're excited about that.
Okay, so a question for you. What signs of froth are you seeing in U.S. large caps? Like, what are you looking at that might cause you to pause?
It's the same things that I've been looking at for, you could argue, 12 plus months, which is mostly valuation. So valuation metrics, no matter how you slice it, are in the 90th percentile or greater. Now, as we pointed out repeatedly, valuation is a terrible timing tool. So you're not going to want to make decisions, investment decisions based on valuation alone. But it sometimes can give you an idea about the magnitude of overvaluation if we were to revert back to the mean. So that's one. The chart that you shared, maybe it was a month ago, percentage of equity allocation by investors is at an all-time high. So like a lot of these narratives, if you want to find a chart or a fact that supports your thesis, you can find them, especially when it comes to froth or overvaluation in the stock market. The last thing I'll say is, that being said, it doesn't mean that we couldn't continue to grow next year, see gains next year. But it probably means, from a valuation perspective, we'll have to see the earnings growth and the economic growth to support the higher valuations at some point. So those are some of the things I see. But you could have argued those things were in place 6 to 12 months ago.
What's thought-provoking for me, and I completely agree with all that, I wrote a blog about how future S&P returns could be lower than they've been the last 10 years. But a lot of smart people are coming out and saying that. Like, you shared a chart with me yesterday. It was very similar to the blog I wrote last month. Vanguard, Goldman Sachs are all saying future returns are going to be lower. There's an old saying in our business, if it's obvious, it's obviously wrong. And when everyone agrees, something else happens. So U.S. large cap stocks have been a runaway juggernaut. And as you said, you could make that same case that they've been rich for not just the last 12 months, but really the last 3 to 5 years. So earnings have been a tailwind. The big 7 companies, or whatever they're called now, have been a tailwind. The AI theme, if that plays out, I think a lot of that is already priced in. On the flip side, if it doesn't play out, you could see a day of reckoning. But it's just interesting to see how the best performers continue to outperform, and some of these beaten down asset classes are just kind of floundering around. But like investing, everything changes. Everything changes. There's no sign that says, hey, this is going to change. But it's just interesting to see the human psychology approach, because, as I've written in the past, from 2000 to 2010, no one was asking, hey, let's put 100% of my assets in the S&P. That's because the S&P had a horrible decade. It was basically flat. But now, coming off the tail of the last 10 years where the market's been really good, folks want to shovel everything they own into the S&P. And it's just when everyone agrees or crowds into a trade, that's when something else can happen.
Well, and I know it's your favorite time of the year when people come out with their price targets for the S&P for the following year. And I can assure you, all of those price targets will be up 10%, 15%, 8%. Nobody's going to forecast a down year, God forbid, or even a flat year. So it's all recency bias. It's all, hey, this was a good year, therefore obviously means next year is going to be a good year. So it'll be interesting to see what those come out at. And more often than not, you want to fade those predictions as opposed to follow those predictions.
I've been doing that this will be my 8th year. So I basically provide a composite of what Wall Street firms are saying about the following year. So it's already starting to happen. They're predicting what happens in 2025. And the average miss rate is like 20%, which for any given year, that's extremely horrendous. That's more like wild ass guessing than a forecast, but people still listen to this stuff. And it's really baffling. And what's cracking me up now is there's a famous bear at Morgan Stanley. And this guy's been wrong the whole way. He's been pounding the table for a huge sell-off. He just published his price target for 2025 of 6,500 on the S&P 500. Now all of a sudden he's saying, oh, markets are going to be up 8-9%. It's like, why in the hell would anyone listen to you, man? You've been wrong month in and month out for a decade. It says more about us than them. They're just giving the people what they want, which is the illusion of certainty. No one knows what happens next. The more specific a forecast is, the faster you should run away.
Yeah, I saw his upside, if everything goes right, was 7,000 on the S&P. So I agree with your thought on that. So talk a little bit about the election polling. I know that's kind of sticks in your craw. So go ahead and share your thought on that.
Well, it's in the same vein of narratives and forecasting. So leading up to the election, and it's amazing that we have fallen for this again, because we did the same thing in 2016, where the polling was saying that Clinton was like an 80% favorite. This time, polling was saying it was a dead heat. And I'm talking about the traditional polls that are fraught with bias and all this stuff. Saying it's a dead heat, the market was saying something completely different. And it's less about the legacy polling and more about when betting markets have folks voting with their capital, that's the sharpest money. People don't want to light their money on fire. So when you're seeing an open market, people betting with their capital, that's usually the most efficient market. The best parallel that I can use to our business is the Fed futures market, where investors are betting with their capital, trying to predict what the Fed does next. Now, you compare that to what Wall Street says about what the Fed does next. I'll put my money on the accuracy of the prediction in betting markets 99.9% of the time. It just is a much better way to do things. That stuck in my craw, how people fell into that trap again and then were somehow shocked that Trump won. The market was screaming Trump was going to win.
Well, especially in this environment where we're so divisive and so polarized, if some pollster calls me and asks me who I am going to vote for, you sometimes stop and think, do I even want to say who I'm going to vote for? Because, am I going to be ridiculed or made fun of or argued with or whatever? It seems like 15, 20 years ago when you would vote, you either voted for candidate A or candidate B. And if candidate A won, then you just moved on with your life. But now it's like a death match or a cage match, that if you're not voting for my candidate, then you're an idiot and wrong and all that. So I think that plays into the polling as well. The only thing I'm going to miss from the election are just the political ads. I really enjoy those ads. And for a while there, I thought the candidate's name actually was Angry Joe Kent, because every ad from his opponent referred to him as that. So I'm happy those are all behind us. So
yeah, and after the dust is settled, hopefully another week, the market will provide another event for folks to talk about and we can all move on. I know this period is ripe with emotion and half the country's pissed off and half the country's happy. I'm hoping we can all move on and come together and actually make some progress. And that's all I'll say about that. It's just hard to talk about investing in politics and tread lightly. It just takes more of an emotional toll. So I'm just happy it's over.
What do you enjoy about this time of year? What are you most looking forward to as we wind down the year and the holiday season?
I enjoy breathing and taking a break and not staring at my phone or my email or the markets. Thanksgiving is quickly becoming my favorite holiday because it's basically Christmas without all the gifting and the tree and the lights and all that stuff. So it's kind of the calm, it's in the eye of the storm for us. Thanksgiving, birthday, Christmas. So at the end of Christmas, at the end of New Year's, my wife and I kind of give each other a fist bump because we made it through another season. Kids are a year older. It's a lot of fun, but it really is exhausting. What's the program like for the Weber household?
Yeah, it's the same. It's, our kids are older than your kids. I remember how fun it was to have the kids at that age where they're so fired up about Christmas and all that, but it almost becomes overwhelming for them and for the parents as well. So we love Thanksgiving. And as you'll come to find out, just getting together with family, getting together with the kids. They're often going in 6 different directions. So when you can get everybody around a table and spend some time with them, catch up with what's going on in their world. That's really what I'm looking forward to most in the holiday season. And the last thing I'll say is Thanksgiving is a great time to reflect on the year and think about things we're thankful for. And I know you don't like to do this type of shilling, but I'm really thankful for the clients that we've been able to build this business with a great group of people to work with, and we get to help those people year in and year out. And in exchange for that, they're very supportive, very great to work with, and really makes the job very rewarding that we get to help those people. So I'm thankful for our wonderful group of clients.
That's well said, and we'll leave it there. So wishing everybody out there, not just Pure clients and associates, a happy Thanksgiving. I hope you have a wonderful break. Check out, get off your phone, be present, and we'll see you next month for another edition of Happy Half Hour. That's Toby Weber. I'm Nick Sherman. See you next time.